Gold prices have climbed to over $2,900 an ounce as investors now seek safety amid rising fears of a global trade war. The news has led to declines in US equities and the dollar, boosting gold's appeal significantly. Concerns over potential stagflation and a possible recession prompting expectations the Fed may cut interest rates multiple times this year. Analysts suggest that any drop in gold prices could be a golden opportunity for investors looking to diversify. We've got Brad Gastworth here from Unearthing Opportunities talking about this. And Brad, will gold continue to surge or will it fizzle out?
Yeah, I mean, I probably sound like a broken record on your program, Aaron. I've been talking about being bullish on gold for quite some time. I continue to believe it's a must-own asset class. It's a great hedge against inflation, but also it's one tangible asset that's recognized globally. And in the areas of, if we go into this more draconian scenario where right now the trade war might bring us, this is an asset that most people should be owning outright. If not, you can own it through ETFs. But ultimately, this tangible asset is going to continue to go higher.
We're seeing a lot of money at the moment, obviously pulling out of equity markets because of this uncertainty. When the house is burning, reach for the gold is always the saying. Is that what's happening here?
Yeah, I believe so. And I mean, there's some people trying to make the comment of buying the crypto instead of gold because they want another digital or another asset class that could be a hedge. Crypto is not a hedge in my eyes at all. I think gold is by far, or precious metals in general. I like silver as well. I think either of those precious metals will continue to perform well. But I think, ultimately, if we go into recession, there's a lot of things that are going to be concerning. I mean, right now, we already have higher prices. So I think that's going to be the first thing on everybody's mind. Can consumers purchase as much as they have been with the higher prices?
It's interesting, we saw the dollar actually, have some issues last week. A lot of investors looking for diversity and the dollar hovering near a 4-month low. Bullion less expensive now for overseas buyers, and then the benchmark 10-year US Treasury yields have fallen too. It's interesting you mentioned crypto, and last week we saw the crypto summit finally take place at the White House. Bitcoin dropped. Isn't it funny that investors are looking to good old-fashioned gold as opposed to new-fashioned gold being crypto?
Yeah, I mean, I'm not surprised, Aaron, and I think these are great points that you brought up in terms of being diversifying asset class. Yeah, I mean, many of these investors that have been making a tremendous amount of money in equities after new high after new high after new high have been diversifying and selling to and building up their cash profile. But on the crypto side, no, I don't think it's that safe of an asset class, and it's incredibly volatile. It's not necessarily recognized globally as a really performing asset class. Obviously, we've had some ups and downs, and it's been more of a bullish run this year and into the last, probably call it 18 months. But it's something that it's in its infancy. It will not replace gold anytime soon. And I think if things really get draconian in a macro environment, gold will continue to rise much higher.
We got pictures of the Fed up, so I better ask about the Fed. With all of the uncertainty, how certain can we be about the number of rate cuts for 2025? We were expecting 4, now it's down to 2. Do you think it goes back up again because of what's happening on the markets? And Trump not necessarily stirring fears about recession, but certainly not denying that it won't happen.
Yeah, I mean, look, I think it's too hard to guess right now that it'll be in the 2 to 4 range or higher than 2. I mean, the biggest concern that I have is prices are going higher. I mean, with tariffs, from these major increases that we're seeing, it's almost impossible to see prices that the consumer will pay will not be increasing. And if the prices are increasing and you're cutting rates, you're just putting fuel to the fire, and prices will go higher. So I don't think the Fed can cut as much, because inflation will just go out of control. So I think there's a lot of things we have to pay attention to. I think ultimately we will get 2 cuts if this continues at minimum, but we have to really pay attention to where pricing is, because right now pricing is going higher and it's not going to slow down.
Yeah, right.